Welcome to Traders Lessons, where we make trading easy for you. Today, we're going to learn about Japanese candlestick charts. Japanese candlestick charts are a popular tool used in technical analysis for trading. They originated in Japan during the 18th century and have since become widely adopted worldwide. These charts provide valuable insights into market trends and price movements. Using candlestick charts, traders can analyze the relationship between opening and closing prices. Each candlestick represents a specific time frame, such as a day, week, or month. The body of the candlestick indicates the price range between the opening and closing prices. A filled or colored body indicates a bearish or downward movement in price. On the other hand, a hollow or white body represents a bullish or upward movement in price. The upper and lower shadows of the candlestick show the price range during that time frame. Traders can identify patterns and formations within these candlesticks to make informed trading decisions. Patterns such as the doji, hammer, and engulfing pattern are commonly used by traders. By understanding these candlestick patterns, traders can predict potential market movements and make profitable trades. Candlestick charts are among the most versatile and widely used tools in the trading industry. Whether you're a beginner or experienced trader, learning Japanese candlestick analysis will enhance your trading skills. Join Traders Lessons today and unlock the secrets of Japanese candlestick charts.